Buying an annuity can feel safe on the surface. A salesperson says guaranteed income, and suddenly it sounds like the retirement problem is solved. But here is the part most people find out too late. The wrong annuity can lock up your money, bury you in fees, and leave you asking one painful question: why did nobody explain this better before I signed? In this video, we are going through the best questions to ask before buying an annuity plan so you can spot red flags, protect your retirement, and know what you are really paying for. Number 1. What problem is this annuity supposed to solve? Before you ask about rates, bonuses, or features, ask the biggest question first. What problem am I trying to fix? An annuity is not magic. It is a tool. Some people want lifetime income. Some want tax-deferred growth. Some want to protect part of their savings from market drops. But if you do not know the exact job of the annuity, you can end up buying the wrong product for the wrong reason. For example, imagine Linda is 62 and worries about running out of money in her 80s. A lifetime income annuity might fit that goal. But if Jake is 50 and may need access to cash in 5 years, locking money into an annuity may create a whole new problem. Number 2, what type of annuity is this exactly? This question sounds basic, but it saves people from huge confusion. Not all annuities work the same way. Ask whether it is fixed, variable, indexed, immediate, or deferred.
A fixed annuity usually pays a set rate for a period of time. A variable annuity lets money go into market-based investments, so the value can rise or fall. An indexed annuity links returns to a market index, but often with caps, spreads, or participation limits. An immediate annuity starts paying income soon. A deferred annuity is built for later. If someone says, "This annuity gives you market upside with no downside," stop and ask for the exact type and the exact rules. That sentence sounds simple. The contract usually is not. Number 3. How does this annuity actually make money for me? This is where many beginners nod politely instead of digging deeper. Do not do that. Ask them to explain in plain English how your money grows and how income is calculated. If it is a fixed annuity, what interest rate do you earn and for how long? If it is an indexed annuity, what index does it track? What is the cap? What is the participation rate? And is there a spread? If it is a variable annuity, what investment options are inside it, and what are their risks? For example, if an indexed annuity tracks a market index that gains 10%, you may not get the full 10%. If the cap is 6%, your credit could be limited to 6%. That one detail changes everything. Number 4. What fees will I pay, directly or indirectly? This question should come early, not late. Some annuities look simple until you realize the costs are stacked in layers. There can be contract fees, investment management fees, rider fees, surrender charges, and insurance charges. Ask for the total annual cost in dollars and in percent. Then ask them to show how those fees affect your return over time.
Let us say you invest $100,000. A fee difference of even 1% per year can mean thousands of dollars over time. Many people focus on the promise and ignore the drag, but fees quietly eat retirement income month after month. Number 5. When can I get my money out? This is one of the most important questions on the list. Ask how long your money is locked up and what happens if you need it early. Many annuities have surrender periods. That means if you take out too much money too soon, you may pay a penalty. A beginner may hear, "You can withdraw up to 10% a year," and think that means full flexibility. It does not. Ask what happens if you need more than that. Picture a retiree who buys an annuity, then faces a medical bill 2 years later. If the contract has a long surrender period, accessing extra cash could be expensive. Retirement planning is not just about growth, it is also about breathing room. Number 6. What is the surrender charge schedule? This deserves its own question because many people never see the full schedule clearly. Ask for the surrender charge year by year, not just the first year, every year. Maybe it starts at 8%, then drops to 7%, then 6%, and keeps falling over several years. That matters because life does not always wait for the contract to become convenient. Ask them to print the schedule and walk through a real example. If I invest today and need $30,000 in year 3, how much would I lose to charges? That answer feels very different when it is no longer abstract. Number 7. Is this income guaranteed for life or only estimated? The word guaranteed gets used a lot in annuity conversations. You need to know exactly what is guaranteed and what is not.
Ask whether the income amount is guaranteed by the contract or just an illustration based on assumptions. Also ask whether the guarantee applies to you alone or to you and a spouse. For example, a chart may show a strong future income number, but that number might depend on bonus credits, optional riders, or future rules. The real guarantee could be smaller than the sales illustration makes it look. A smart buyer does not ask, what is the best case? A smart buyer asks, what is the floor? Number 8. How does inflation affect this plan? This question is huge, especially for retirement. A payment that feels solid today may feel small 10 or 15 years from now. Ask whether the annuity income stays flat forever or has any inflation adjustment. Imagine getting $2,000 a month at age 65. Sounds fine, but if prices keep rising over the years, that same $2,000 may buy much less later. Some annuities offer increasing payments, but there is usually a trade-off. The starting payment may be lower. You want to understand that trade clearly before signing. Number 9. What happens if I die early? This is uncomfortable, but it matters. Ask what happens to your money if you die soon after buying the annuity. Does your spouse keep receiving payments? Do your beneficiaries get anything back? Is there a death benefit? Some annuities are billed mainly for income and may leave little or nothing for heirs, depending on how they're set up. Others include certain protections. For example, if you choose a life-only payout, payments may stop when you die. But a period-certain option or joint life option may keep payments going longer. That choice can affect both your monthly income and your family's future.
Number 10. Is there a bonus, and what is the catch? A bonus sounds exciting. Extra money just for signing up. But slow down. Ask how the bonus works, when it becomes fully yours, and whether it comes with longer lockups, lower future returns, or higher fees. Sometimes a bonus is less like a gift and more like bait. It may look generous in the first meeting, but the trade-off can cost more over time. If someone highlights the bonus more than the contract details, that alone tells you something. Number 11. What optional riders am I paying for? Riders are add-ons. They can provide extra features, such as lifetime income options or enhanced death benefits. Some are useful, some are expensive clutter. Ask which riders are included, which are optional, what each one costs, and whether you truly need them. For example, a person who mainly wants steady future income may value an income rider, but someone who already has strong pension income and only wants safe parking for money may not need extra bells and whistles. A good rule is simple. If you cannot explain the rider in one sentence, do not pay for it yet. Number 12. What are the tax rules when I take money out? An annuity can offer tax-deferred growth, which sounds attractive, but tax-deferred does not mean tax-free. Ask how withdrawals are taxed, whether gains come out first, and whether taking money out before a certain age could trigger penalties. For a beginner, this is easy to misunderstand. You may think, I did not pay tax while I grew, so maybe I won't pay later either. That's not how it usually works. Always ask what the after-tax income could look like, not just the headline number. Number 13. How strong is the insurance company behind this annuity? An annuity guarantee is only as strong as the insurer making it. Ask about the company's financial strength ratings and how long it has been in the annuity business. You are not just buying a product, you are trusting a company to keep promises that may last decades. If two annuities look similar, but one comes from a stronger insurer with clearer terms, that can matter more than a flashy feature. Retirement is too important to treat the company behind the contract like a small detail. Number 14. How does this compare with other retirement options? Never ask about an annuity in isolation. Ask how it compares with keeping money in a high-yield savings account, bonds, mutual funds, retirement accounts, or even waiting before buying anything at all. For example, if you already have Social Security and a pension covering most of your bills, you may not need as much guaranteed income from an annuity. But if most of your retirement depends on your own savings, an annuity may play a bigger role. The key is fit, not hype. Number 15. Can you show me the worst-case scenario? This may be the most powerful question in the whole video. Ask them to show you the bad version: low returns, early withdrawal, high inflation, dying sooner than expected, living much longer than expected, a spouse surviving you, needing extra cash. Most sales conversations lean toward the shiny version, but retirement planning gets stronger when you pressure test the plan. A good advisor should not get uncomfortable when you ask this. They should welcome it. Number 16. Can I take this contract home and review it before signing? If somebody pressures you to sign fast, that is a warning sign.
Ask for the full contract, the disclosure documents, and a written summary of fees, surrender charges, payout rules, and rider costs. Then review it slowly. Big retirement decisions should never feel rushed. A great product can survive a second look. A bad one usually hopes you skip it. The best buyers are not the fastest buyers. They are the clearest thinkers. An annuity might be a smart move, or it might be a very expensive mismatch. The difference often comes down to the questions you ask before you sign. So before you buy any annuity plan, slow down, get specific, and make sure you understand how it works, what it costs, and what happens in real life, not just on a sales page. Which of these questions do you think most people forget to ask before buying an annuity?